August 2015. I'm going to quickly be going through some of the event-driven risks that we have this week and some of the market structures that are setting up into the week ahead and some of the opportunities hopefully that we'll have to trade. This week we have a little less data than the previous weeks. A couple of interesting things to look at, but we're going to quickly just run through what we have on the schedule and then take a look at the Bund and the Eurostoxx futures markets and a little setup in the gold market as well, because that's actually set up quite decent, and I think there'd be some decent opportunity in the week ahead. Right, so starting off with Monday, data points. Basically nothing on the data point front. We just have the central bank policy speaker, the Fed's Lockhart. Is a voter in the middle. Watch out for any comments from Lockhart. Lockhart obviously being one of the, I'd say, active speakers. So he will, often say something that can affect the market. Keep a close ear on that. The closer and closer we get to September, the more speculation is going to be on whether we get some sort of rate hike either in September or in the months leading up to the end of the year. Tuesday we've got the German zoo survey expectations. Not as relevant as it used to be, but keep an eye on that if you're trading in the European markets. On Wednesday we have the UK ILO unemployment rate, 3-month unemployment rate, which is pretty key figure, so keep an eye on that, and obviously the earnings, the average hourly earnings from that, because that is going to be really quite important for the UK markets. Obviously, last week we had the BOE Super Thursday, where we had the quarterly inflation report, the minutes, and the rate decision. The minutes were, we had an 8-1 vote for no hike, in favor of no hike. That one vote for a hike was from the BOE's McCarthy, and we were slightly looking like we were going to get 7-2. We were expecting a 7-2. We got an 8-1, which was slightly more dovish than expected. The CPI forecasts were actually in line. The 2-year CPI forecasts were in line at 2%. So overall, we had a dovish reaction from the market. But keep an eye on these job numbers, because everything is data dependent. These central banks are waiting on the data. If the data gets quite strong, relatively strong, especially on the wage front, that could push them into possibly boasting up their rhetoric for a rate hike. So keep an eye on these figures. This is an especially important one next week. US DOE crude oil inventories. I typed that in US twice there, but DOE crude oil inventories as every Wednesday comes out. Keep an eye on that, because crude oil has actually been on a rather I'd say roller coaster slump to the downside. It's down some 30% since its last swing high. So keep an eye on this these figures, because there's been quite a bit of volatility in that market. So anyone that's trading oil, obviously you would know to be looking out for these figures. Come Thursday with the German CPI number, that is a final reading. The US retail sales, which is pretty much the biggest event of the week, for me at least as a bond trader, looking at the US T-note complex. That tends to move quite aggressively on these U.S. retail sales number. Obviously, the U.S. being a consumer-driven economy, you want to see how the consumers faring, and the retail sales is a good advanced reading on that. So keep an eye on this figure, because it's moved the market sometimes more than the non-farm payrolls number. Going back on, I'd say the last 6 months to a year, I'd say the retail sales have been a lot more volatile than the non-farm payrolls. So just keep an eye on this figure, because we could see some good volatility if we get a very big beat or a very big miss. Obviously, the last time we had the retail sales was a miss, so I'd say the bigger surprises are if we get a bigger beat than expected. Moving on to Friday, the European CPIs, the US PPIs, and the US University of Michigan Consumer Confidence. And then we have got the RBA speakers, Kent, delivering a speech on labor market developments in Brisbane. So what I'll do is quickly go through some of these markets with you guys, and then we'll take a look at the risk and money management plan for the week ahead. Obviously a little bit more lackluster than, like I said, previous weeks, but there's some interesting market structures that I'd like to go through with you guys. So if we look at the Eurostoxx 50 as usual, the way it's set up, coming into this week, up until Friday, we were basically one time framing. When I say one time framing, I mean we were just making basically since 28th of July, we're making higher highs, and consecutively. The most important thing in one time framing is just making higher lows. So we weren't able to take out the previous lows or the lows of the previous day every day up until Friday. So Friday we took out the low of Thursday. So it's set up relatively short-term bearishly, but just remember context-wise, we've had a very sharp rally. We've hit a retracement, bounced quite aggressively, and now we're still holding above this big flag slash trend channel. So for the time being, the context in the medium to long term is still very much bullish. The short term looks a bit bearish, but I'm looking for any cues as to when the market might be turning for that that break of these highs these swing highs at 37.14. I think if you take a look from the market profile perspective, you'll see that where we've closed, you can see from the analysis we did last week, and we spoke about this in the wrap-up, how from the roadmap we made last week, we were talking about this key inflection point between 92 and 96s on market delta, basically around 95, 96s, was the value area low and value area high of this week. We said if we can hold above that, and you can go back to the roadmap and hear how I was describing that, if we can hold above that and not post more than a couple of hours or two to 3 hours below this value area high, which we didn't. We did about, I'd say, 2 hours, 3 hours max in this area before we started progressing and posting TPOs and value, inevitably testing these 36.40s, which was our target basically. As long as we came inside this value area, we would be testing the VPOC and POC area. So we tested that initially, found some resistance, then we broke back above, made our way up back higher. We posted a high at 36.88. Ultimately, the target on that would have been to trade 36.58, which we did, the value area high of that week, and we subsequently closed back into this area. Now, interestingly, we're closing in an area where we've done a lot of, we've traded a lot in this week here, so it's an area where we're used to doing business. However, last week we've got a bit of a cave, as in the time value is quite depleted. We've got a bit of a cave here and then here. So I'm looking from around these 36.58s, which is that previous value area high, and we've got a bit of a low volume node there. From around here down to about, I'd say, 36.19. Just from a cave perspective, it interests me that we might look to fill this out. Now, if you take a look just purely on the value area side, the value area low of last week comes in at 36.29. So I think even if you are looking to buy this market up come next week, I'd say you could give this a bit of slippage, this value area low, a bit of slippage down to these 19s, only because we've got that bit of a cave, low volume in here, a bit of higher volume bulking here. That should be your real area of support. You could get a bit of slippage through there as well, but ultimately you don't really want to see it holding and creating value in this area. So if we do make it and start trading and holding and building some heavier TPO counts here, I think there's a risk that we might start breaking back below these 92s. And if we do, and if we break and hold below these 92s, I think we might get a pretty swift and aggressive move down to these 74s, which is the VPOC of that week. But ultimately, I'd look on that trade either on a daily or 2 daily perspective for this to move all the way down to 35.44s. Just because I'd say anyone that's gone aggressively long is probably going to look to get out because the swing low of that week alone could be their risk, in my opinion. So let's just see how this pans out. Obviously, the context, like I said, medium to long term is still bullish. Sorry. But we'd have to kind of fill this in first before I'm looking for the next real move. Ultimately, value extends all the way back up to these 36.83s, and the VPOC quite coincidentally is at 36.75, which we already had a previous weekly VPOC there. So quite an interesting level. Might be a bit of a pivot early doors, so just keep an eye on that level. Above there, the weekly highs are at 36.88. We're looking at these previously weekly highs at 36.96, and then ultimately that swing high like we spoke about at 37.14s. So those are the levels. From a structural perspective, I'd really like to see it if we were going to start, attacking to get back up to these highs. You really want to see it holding above these 75s. Obviously, it's important for us to build value above these 83s, but for me, the ultimate test is if we can actually build structure above these 75s. If I can see that we're building it, using it as support above here, I'm going to probably be looking to position for myself for a break of this high and a test of these 96s and possibly up to these 14s, which I don't think is something so unreasonable to think, given the way the market's structured. So if we take a quick look over the Bund. Now the Bund's had a pretty interesting week last week from an auction perspective. We saw that coming into the week, we had this inside day from the previous week's Friday. We came in and we managed to break that to the upside. Then on Tuesday we posted a very, very bearish candle. Broke back above here, ended up closing very, very weak on the day, and then Wednesday we had a very, very aggressive move to the downside, in which we held these 52.91s, which is that previous weekly high, as you can see just in there, and then subsequently posted an inside day on Thursday, which broke over the NFP. So that broke, with some particular strength, I'd say. I think there was some really good price action in there. Obviously, after the NFP number, the NFP came in at 215, which was slightly lower than expected at 223. But we started getting initially some sort of rate hike expectation trades. So the short end of the curve, you saw your euro dollars were very well offered. The Euro USD was very well offered, so selling off quite aggressively after it blipped up, then sold off really, really aggressively. We had your T-notes selling off aggressively, but the Bund was was really, really buoyant and was holding a decent bid. So you started getting these Bund versus T-note spreads getting put into the market, and then when the T-notes started catching a bid, that's where we saw the Bund start taking off to the upside. So ultimately, we're still sort of, I'd say, filling in this previous value where we didn't quite do a lot of volume in this area in here. Seems as if we're kind of trying to fill that in for now, and ultimately we're capped at these 155.13s, which, like we've gone through many times before, is our door into this value area. So if we can get through that door at 155.13s and hold, that's where we're getting an indication we might auction back through this box type area. That goes all the way up to these 156.69s. So really, that's really that major base structure that I'm looking at to see if we can get back in. And if we can't, I think there is a risk that we might, eventually fall back into this larger value area to the downside. So this is where the way the market's structured on a daily in the Bunds. If we take a quick look over at the market structure from a market profile perspective, this is how we've closed on the week. We've closed around here, which puts us at 154.44s. Now, the interesting area, obviously, if we open around that area, we're going to be opening within value, which we haven't done for a few weeks now. Every week, we've talked about the fact that we were opening outside, pretty much going to be opening outside of the previous week's value area, and every time we'd come, we'd test that value area high and get a bounce. Last week, it worked perfectly. We spoke about it in the roadmap. We came down to these 10-11s. We made a swing low, then Monday into Tuesday we rallied. So there was a decent reaction there. This is the first time now in a few weeks that we're actually most probably going to open within value. Now an interesting area within that value area where I'd like to look for initial support would be these 154.25s. We've got the weekly VPOC there, and then just below at 24s we've got a weekly high just nestled in there. So I'm looking potentially early doors for a trade in here, and it doesn't have to be, it's not something I'm looking to hold, obviously, because from an auction perspective we're still within that value area, but I'd look for a scalp, I'd say, for this to trade if it does get back down here, maybe to trade back up to this close or something along those lines. It'd probably be more short-term scalp, but I'm looking at that area nonetheless. Now, obviously, our value area is overlapping that value area high at 154.10s, but I'm not going to neglect it. I'll look at it as an interim support or resistance level, but ultimately, our real support comes all the way down here at 153.57 and 153.58. So we've got our value area low of the week at 57s, and 58s is a weekly VPOC. A level that we were looking at in case we got back below these 10s, which we did last week. We said if we get back below these 10s and hold, the market's likely going to auction its way and test these 58s, which we did very, very, very quickly, and in fact got way through that and overextended to the downside. But I'm still looking at that area now because it's a value area low and a previous weekly VPOC. I think that could be a nice inflection point, and I'm looking for some support if we do get down to that level, which is a fair bit away, I'd say, but nonetheless, it could, the bund can do anything and will do anything if it has to. To the upside, obviously, we've got the 154.67s, which is our weekly value area high, and then obviously the high of the week at 155.09, just before those 155.13s, as we pointed out on the daily structures. Right, so that's pretty much the structures that you can see in the market profile. I'll leave some of the more intricate profile dynamics to the daily streams, the morning streams that usually Dan or Reg do on Futex Live. And we also get the likes of Sojan on Friday, which is also really good to listen to. But yeah, that's pretty much the market structures I wanted to go through. If we take a quick look over that event-driven risk and money management plan, not really much going on Monday and Tuesday. Although I've seen on Tuesdays recently, we've been doing a little bit more volume than usual, Tuesday and Wednesday. So I'm giving myself a few chips on Tuesday. Monday, I generally don't trade much because just coming out of the weekend, and usually there's not much activity on Mondays unless there's been a huge news event over the weekend, which I don't think we've seen this weekend, as far as I know. I'm putting a little bit of risk there, 10%, 25% on Tuesday. Wednesday, we've got the ILO, if I'm not mistaken, the ILO unemployment rate, so 25% I think is suitable for that. And Thursday is the retail sales, which I'm giving myself 30%. For Friday, we've got 4 venturing risks. However, I'm leaving Friday evening back to Cyprus. Going to head back to the home country for a couple of weeks. So I'm going to be trading pretty much a half day, and I really don't want to be putting too much risk allocation if I've got a half day. Usually what I found, and I think what a lot of traders find, if they've got half a day, or let's say a finite amount of time that they're going to be trading, that's less than what they usually trade on a day, for some reason or other, it's a lot easier for them to stop out on the day or do worse than they usually do, just because they're in a rush to leave, or they have a certain time limit. They're not trading from 7 a.m. 7 a.m. until 4:30 close. You're trading from like 7 to about 11, 12 o'clock, and if you don't do very well in that session, you're telling yourself, wow, I've only got 2 or 3 hours left, or I only got 1 hour left. So it kind of messes with, I'd say, your risk management in that respect. It shouldn't, but I understand as a discretionary trader, I'm only human, so there's certain rules and kind of boundaries that I set myself so that I don't overdo it on those kind of days. So yeah, I would say if anything, I would have put a little bit more, maybe 15-20% on a Friday. But like I said, because I'm trading a half day that day, I'm putting myself at 10% risk allocation. Right, guys, thank you guys very much for listening in. I hope the volume was a little louder than last week, because we had a few minor complaints on YouTube about how loud the volume was. Apparently it was not too loud, and yeah, we've had a few technical issues, but I'm hoping that got resolved, and if not, please let us know, and we'll make the appropriate changes. If you guys have any questions for me, please feel free to hit me up on Twitter. The username is at MVS_FutexLive. So give me an ad, and yeah, ask me anything you want. I'll be in until Friday. Take care, guys, and bye-bye.